What's up, everybody? Good morning. Welcome aboard. This is Trading with Bubba, and it is Tuesday, the 16th of January, 2024, and markets are a little wild. Suddenly, they simply fell apart. Just over the last few minutes, they have just simply gone and are headed basically straight south. Let's just take a quick look while we're here. And these are the futures, short time frames, but bang, they're going straight down. There must have been some news that just must have hit at the top of the hour. I don't know what it was, but certainly this is not a natural reaction to markets. This is, for some reason, all of a sudden sellers have shown up and are taking the markets straight down. Okay, so again, why we don't know, but at the end of the day, so now what we'd be looking for if I was trading right now, and I'd be looking for a spot to potentially buy. Okay, but for today, it's back to a new week. The one thing I would consider buying is if Boeing continues to go lower, I'd look to sell some put spreads in this if they continue to go lower. We get a little bit more volume here, because at the end of the day, this is a very dramatic blow off. The stock is down 30% on a news item, which is a couple of weeks ago. Fed's Walter says data in the last few months is allowing Fed to consider cutting the policy rate in 2024. So it looks like they may not cut rates, which we have said here all along, that they may not cut rates. But in the meantime, let's take a look at our views. And of course, Apple is still in consolidation, as we said last week. Look to be a potential put seller about 180, which we haven't gotten down there yet, so we'd still be waiting. Amazon, okay, reached oversold. We talked about on Thursday selling some call spreads. Would have been a pretty good trade. Okay, again, look, I don't like to go back. If I didn't make the trade, I don't typically talk about them. But again, these are ideas that we're sharing here on a regular basis. Okay, coin, a little bit of a bounce. Remember, we sold it up here, and we said that if we got back down to around 120, it would probably be an area to look at to be a buyer. And again, it really doesn't matter what the chart or the company is or whatever you're looking at, because at the end of the day, all charts are the same, and all these patterns repeat themselves over and over again. So again, we're looking for support here to maybe be a put seller or put spreads. Meta continues up against the upper end. Look, the only trade I could make here, and I don't want, when I'm selling premium, I'm not getting long or short the market. I'm playing the time game. Okay, I'm saying that I don't think Meta is going to go much past 375 in the next 3 or 4 days. Okay, could it? Of course it could. But I'm saying that based on what I'm watching, based on that it's oversold, I'm overbought, that the probability and the odds tell you that it probably will not. And after all, in this business, all we're playing is the odds and probability anyways. Okay, so again, I'm not telling you to go out, run out and get crazy. What I am telling you is that if you use the probabilities to your favor, you're going to be putting yourself in a much better position over time. Okay, so as we go back again, so here would be a potential sell. Okay, Google, which is in an uptrend, but it's reached an overbought position. It's reached an area that is a higher probability that it either holds here for a while or goes lower. So I'd want to look to be a seller premium. Again, we're not taking a massive or dramatic position. We are taking a position of time. Okay, I'm saying that between now and Friday, that Google's probably not going over 145. That's what we're watching. Those are the things you're thinking about when you look to make these types of trades. IWM down on the bottom end. It's down today, but maybe it's an area to go ahead and sell some put spreads. Again, we don't have a bias. We don't have an opinion on the market. All we're looking for, again, is high probability trades. I mean, looking at the chart specifically, I would think that I'd like to see it go down a little bit further and sell some spreads about 188. But again, certainly I couldn't blame you if you did against a 190, because again, there you are, very oversold, opportunity, potential that is knocking at your door. Okay, Microsoft continues to go straight up. Microsoft is for sure a put sell. A call spread sell here. Okay. Now the question in a Microsoft here, at the way that it's gone up, Do you want to be aggressive and sell in the money spread to create a synthetic put? Or do you just want to sell spreads that are just slightly out of the money and take the premium? Again, there's two ways to play some of these trades. When you see an escape or one that moves so far out of range, you have to assume there's going to be a snapback to the mean. That is something that we're always watching for, the snapback to the mean. So you look at this and I go, well, maybe I'd like to make that trade here. Okay. Nugget, November Uniform Golf Tango. Again, we don't trade it much, but again, this is a play on gold. You know, our gold is getting hammered today a little bit. Would I be interested in potentially getting long gold? Well, I wouldn't be interested in doing anything outright right now. The only way I want to play this is to, sell some put spreads. If I wanted to play that, NVIDIA, look at this. Continues to go straight up. Now, here's a trade we talked about last week. I put it on 3 times. All 3 were losing trades. I'm going to put it on again today, okay? Because, again, this movement is so far overbought and so far extended. And notice how wide the standard deviations are now. Now, look, if it goes up, I'll lose money. It'll be a bad trade. But the probability suggests that there's a greater chance that it comes back down to the mean than go to, let's say, 600, for example. Okay. So again, you have to play the probability on these models so that you are always doing the same thing, because basically what you're doing is you're in a position to repeat probability. Okay. And that's, if you're playing a numbers game, which is what we're playing. Okay. This is a game. This is no different than poker, gin, backgammon, or bridge. Okay. What could you do with Tesla? Well, I'll get there. I'll get there, my boy. We were shorted, and we are actually shorted, but I will get there. Okay. What we could do with Tesla. But again, remember, it's a numbers game we're playing. Okay. So if we look at Tesla here, let me pull this up. Okay. I'll go ahead of schedule. I mean, if I was going to look at Tesla right now, I would be looking to sell put spreads. Okay. I would be looking for a rally. It's very oversold. Okay. It's getting a little bit of a pop this morning, but certainly I would look for a little bit of a rally. And again, I would be a seller of put spreads in this position here, looking for, again, some retracement to the mean. Again, we're a big fan of the math model when we're trading. So, I mean, I wouldn't directly get long and go crazy here, but I think if you looked at selling, or, like, for example, let's just pull up Tesla here. And Tesla. Okay. All right, so Tesla is, let's say if I look for Friday, why are these not linked? What the fuck is going on? They're supposed to be linked. All right, well, I'll type it in myself. What the hell's going on? Yes. Okay. All right. So I was looking at Tesla for Friday. Stocks at 220. I might sell the 217, 215 put spread. Okay. For 80 cents. Okay. I think that's got a pretty high probability of cashing. So that would be a way I would trade it. If I wanted to be more aggressive, okay, and think that it was going to make a bigger move up and wanted to create like a synthetic put, I could sell the vertical and sell, let's say, the 210 call and buy the 220 call. Okay, so that basically what I'm doing with this trade is I'm buying the two. I'm doing this backwards. My apologies. I'm going to switch this to I don't want to be short. I want to be long. I want to sell the 230, 220 put spread. Okay. Okay. So what am I doing here? This way. There we go. So what am I doing here? Okay. I am creating a synthetic call here. Okay. By selling the deep in the money put spread, and I'm basically buying the 220 call, which is on the board at 450. I'm basically buying it for 330. So I'm saving $1.20, okay, on the initial premium, of course, if I'm going to save some money on the initial premium, what am I giving up to do that? Okay, well, I'm giving up the unlimited potential profit. If we go back to 240, I'm still only going to make 680. Okay, but again, I'm saving $1.20 or so on the initial purchase of a call. Okay, so again, add those $1.20s together a number of times, it becomes real money. Okay, that's what you want to remember. The beautiful part of trading in options is the way that you can create types of trades depending on how strong you view what you're looking to do. Okay, it comes back down to how strong is your view based on what you're seeing in the chart, not based on what your opinion is, but based on what you're seeing in the chart. So if I look at Tesla's chart, okay, and I go, okay, let's see here. So it's pretty flat, pretty neutral, but I do think it's got a good chance to bounce from here. So again, how aggressive do I want to attack this? Well, there's another way to attack this by, I could create a risk reversal or a synthetic. Okay, so I would just buy the call, sell the put, but I have to protect the margin. So I would just buy a put down below here to cover up my margin. Okay, so now I'm putting on a trade. I'm basically buying the 220 call for $1.89 instead of $4.50. Okay, I'm buying $1.89 instead of $4.50. However, what is my risk on this trade? Okay, well, how much exposure am I taking on this trade? Okay, and the answer is, or the answer, if you don't know what it is, it should always be, what is the spread risk? Okay, so the spread risk is $10. Okay, and what was the debit or credit? Well, in this case, it was a debit of $1.34. So my actual risk on this trade is $1,134 max. Okay, but instead of paying $4.30 for the call, I'm actually buying that call for $1.23. So should it go in my favor right away, I can be in a profitable position right away. And then I can go into using a rolling mechanism where I can continue to lock in profits as it goes in my favor. Again, these are a little bit more advanced than what we normally would talk about. And of course, we'll get to them as we roll along in our Tuesday trading. But again, using the creativity that you can use in the world of trading, okay, and in the world of derivatives, gives you a much greater advantage because you get to set up individual trades as to how you see them at the time that you see them. Okay. And again, it's not always, there's no 100%. This is the one only way to trade this. There's a number of different ways to trade any product. Okay. And if we go back, okay, and look at it's Square, for example. Well, Square is coming down to support. So a Square, I'd probably be looking to sell some put spreads. Again, it's a real simple game as you're waiting. Again, I don't have a strong opinion on Square. I mean, the chart looks not bad. I mean, it looks weak recently. It is coming to support. It is oversold. So why not take a whack that it's going to hold? And again, it's only got to hold for the next 3 days. Okay. And what would I do on a trade wise? So let's say Square. Let's see what it looks like. Square 65. So if I sold, I might, if I were going to do it myself, which at this moment I'm not going to do, but if I were to do it myself right now, I might sell the 65.63 for 65 cents. Okay, it's got to hold. My risk is $1.35. I'm getting a 65-cent credit, so I'm getting 32.5% on my money, and it's got to stay above 65 or close above 65 3 days from now. Again, a little risky. You could go a little bit safer route. You could do the 64, 63 for 27 cents. You've got a $1.25 cushion before you're in trouble. You're protected for $1.50. You're protected down to 63.50. So again, these are the decisions that you have to make as you're trading, and it comes back down to risk versus reward and what you're trying to do. Okay. Again, there's no right or wrong answer. It is, but what's the thing you have to be most concerned about is exposure. Okay, is this the right time to take more exposure or less exposure? I think this is the right time to take less exposure in general because the markets themselves are still working on extremely light volume. There's not a lot of commitment yet. We saw this big move a few minutes ago. Right when we were tuning in, we saw this big drop across the board, which was all news based on maybe the Fed's not going to cut. And I think, again, my personal opinion is I think that there's a markets are in a lot of trouble, but I'm not going to get short just because I think that the overall trend is still up. So why would I want to get crazy? But again, I think this is another warning sign was that they talked about, well, maybe they're not going to cut rates this year. And considering that the whole rally was based on rates, okay, that would be something to be concerned about, right? That's another potential weakness in the marketplace, okay, that could change the overall direction. Now, we don't trade the news, we trade the chart, okay? And certainly, I didn't have time, and I told you that we would look to be a potential buyer in these markets when we tuned in. Now, again, I'm not saying we should have or we didn't, because I didn't do it, so I don't talk about it that way. But again, I knew based on what the pattern that we were watching, that there was a higher probability of a recovery or a bounce than they would continue to go lower. And we are seeing it now. Now, again, is it going to hold? I don't know. But again, if I'm making a short-term trade, I don't care. Okay. Again, I'm a long-term capital gain off of these charts is 4 minutes. Okay. So don't get into the habit of trying to say, well, I would have, could have, should have. No. You look at the chart and you make a decision. The decision that I'm making in here is in the spiders, kind of close to the mean, probably nothing. Okay. The Qs, certainly a little bit above, but really nothing, but up against a resistance level. So that would be, I would be looking to sell some call spreads. And again, it's kind of redundant, but the business is redundant. Okay. What we do is filled with redundancy. Okay. Because if you go back again, all charts are the same, all patterns repeat. The shortest time frame always is the lead time frame because a market cannot trend higher or lower until it starts trending higher or lower in the 1 minute, 4 minute, 5 minute, and so on all the way forward. So that is something that you have to remember as you trade, okay, and as you look. So again, you're trying to find where it is that you can grab an edge on the market, okay, and put yourself in a position of the lowest potential risk. And again, risk, and the number is not important. It is the percentage of risk to your account, the percentage of risk to the trade versus the percentage of profit to the trade. So those are all the things that you're watching and the decisions that you're making, okay, based on that information. What Waller said, I could care less. I mean, I knew that something had come out because I saw the way the markets were moving. Markets do not make moves across the board like this without some sort of news. And since the news, we're all seeing now a gentle recovery against everything. So at the end of the day, again, I warn you, I want you to be safe. I want you to learn to use these derivative markets. I want you to have a great day, and we'll see you back here on Thursday. I am doing a webinar tomorrow for Wealth 365 if you want to tune in tomorrow afternoon at 2 Eastern. And of course, if not, I'll see you back here on Thursday. Have a great day, everybody. We'll see you Thursday.